buy or sell the euro / Chinese renminbi pair. First off, read this disclaimer carefully and do your good deed of today by liking and subscribing. So here is the pair, euro / Chinese renminbi. Basically at, the 52-week lows, and we have seen a minus 10% pullback. Let's jump into the charts. So what I find especially interesting here, that's these super mega time cycles. Rise, decline, rise, decline, rise, decline. And supposedly, the time cycles suggest that there's a major multi-year rising phase around the corner. Obviously, there's no guarantee. The time cycles that we have seen, they did show us a pretty strong trend. Obviously, the bears are in control at, the moment. There is a bit of a but though, if we zoom in here and look at the last 2 weeks, looking here at, the wicks, we do see that we were much lower than the bulls show up. Much lower, and then the bulls show up. So the dynamic of what is happening to the price here is way different than what we see with the wicks here. You see that here, we close basically towards the lows, but very recently, you see, the last 2 weeks, there's a change in the force. If you look at one of the previous times where we did see something similar, back here, you see that there's a change in the wick, and then it did result in a rally. In this instance, there was an attempted change in the force, and you do see on this week, we did go up more ambitiously, but met resistance at, the green 50-week moving average. But basically, it's pretty clear given the history that previously when this happened, it can be self-reinforcing. So yeah, I would lean very speculatively bullish, but this is obviously speculative given that the bears have been very ferocious. Looking at the daily data points, this is where you see that it was on the 26th of November that there was a big bull move. So yeah, interesting. Okay, so let's look at these other indicators. Looking here at weekly data points, RSI, we are at an extremely low level. The previous time we had this kind of level was back here, and that formed a very key time cycle low. Another time that was back here, a key low, and we did get a very substantial rally. The distance from the purple 20, green 50, and the blue 100-week moving average, it's at levels that have formed lows in the past. Going to the daily data points, yeah, especially here when we look at the red 200-day moving average and the blue 100-day moving average, and also the green 50-day, we are at levels that have formed key lows in the past. When we look at the correlations, with the S&P 500, there's a minus 30-ish%. With the Europe stock market ETF, VGK, minus 35%. And then there's 18% positive with the China ETF, FXI. And then minus 21% with the dollar index. So we do have correlations, of course, but you see here that the theme is that they are very modest long term. Looking here at the daily data points, when we do have a strong negative 84% correlation with S&P 500, and 19% positive with the Europe stock market, 71% positive with the China ETF, the FXI. So that there we do have a very strong correlation. It is, however, at the high end of that range. And then almost 100% negative with the dollar index. When we look at the seasonality, we do not get seasonality for the euro Chinese Remninbi pair, but we do get it with the euro and dollar pair. Over the last 5 years, December is the strongest month, well, one of the strongest months for the euro. Over the last 10 years, it's the strongest month. And then the last 20 years, you clearly see that December is the strongest month for the euro. Given that, that increases the probability that the bulls will be able to use this as an opportunity to form at least a temporary low, potentially even a major time cycle low. That obviously is to be determined. So yeah, there's definitively some interesting developments here, and I think that, there's more reasons to be speculatively bullish here than bearish. As far as more broader, when it comes to the market, we do see that there's been some significant corrections already. Here, as an example, in the sectors, in consumer cyclicals, many of these are in bear markets. Internet and e-commerce for emerging markets way into bear market. You see here that streaming services way into bear market, gambling bear market, the gig economy is deep into bear market, financial technologies, fintech recently entered bear market. Bear market, defined as more than 20% pullback from the highs. China real estate, no big surprise that it's in a bear market. Alcohol and tobacco. The Vice ETF is pretty close to bear market. You have the infectious diseases ETF approaching bear market territory. Healthcare tech and innovation recently entered bear market. So you see that there is this stealth breakdown of these sub-industries. So far, if we look here at the S&P 500, we only have a minus 4% pullback from the 52-week highs, but it doesn't, as you can clearly see, it doesn't give us the big picture. The key thing is what is happening more broadly, and that is definitively making a very strong case for building a market-neutral portfolio.